get to this outlook statement then that you've given us today around growth for the industry, for container growth. What are you trying to communicate to the market about the weakness in the industry at the moment, or the strength?
Well, first of all, I'm trying to communicate that despite the weakness, we're having some fairly decent results. But secondly, it is very clear for global growth that it has come down a lot, and we can see that in the volume trade numbers. We believe they will come in, when everything is said and done, at about 1.5 percentage point of growth in the third quarter. That's not a lot, and it's obviously impacted by the trade tensions, the impact that has on business sentiment and confidence, despite the fact that consumer confidence actually is pretty high in most places in the world today.
So what kind of impact, can you quantify the impact that the trade tensions are having on your company? Because sometimes your numbers have seemed resilient as in the face of these trade tensions then, Soren.
Yeah, so our operating earnings are up 14% compared to the same quarter last year. So of course, we have been able to more than mitigate a low demand growth scenario by taking cost out and so on. But obviously for the world and for the global economy, it's not a good news that we are not growing any faster than what we are. We will continue as a company to be very disciplined in terms of our capacity deployment, and that means we can keep our cost low, and therefore we also can continue to grow earnings, we believe, despite the fact that we're in a very weak growth scenario.
Yeah, where is this weakness showing up the most then, Soren? Where are the trade tensions showing up the most?
Clearly, most in the Pacific, so between US and Asia, where we might end up for the first time in many years with a market that overall have declined. We have seen all year, of course, that exports from China to the US have been down, but they have been outweighed by exports from Vietnam and Southeast Asia and so on to the US. But coming into the third quarter, we're seeing decline overall, and that is the market, combined with also Latin America, where there's weakness for other reasons, in particular because of the economy there.
You've managed to offset weak demand in previous quarters, Soren, through improved capacity management. Lower fuel costs have helped, of course. How much can self-help measures really assist you?
Well, I think we can still do a lot to manage our business better. There's more to be done on the cost agenda, productivity. So I think we have our own fate in our hands.
And let me ask you about the, well, a little bit further on that then, technology-driven productivity gains, also something that I know helps in your industry. So where is it that you can still focus in terms of using costs, using self-help to tackle a slowdown?
So we have a couple of areas that are where we're using technology to lower cost. One is the way we transact with our customers. Today, Maersk.com is a website that transacts more than $20 billion in revenue per year. It's customer self-serving, basically getting price quotes, making bookings, and so on. And obviously, there's an efficiency gain for us. The other area is around the port automation. Where we are using, Internet of Things technology to automate the machines that we operate. The same is going on the ships when it comes to fuel efficiency. So there are plenty of areas where we can use technology to take out cost and become more efficient.
How ready is AP Moller-Maersk for the changes that are coming, the IMO 2020 regulations, the International Maritime Organization, trying to clean up the fuels used in our seas? How ready is the business for that? What changes have you had to make?
We are absolutely ready. I think we have a solid plan, both for in terms of how to make sure that we are compliant, how to mitigate the cost impact, and how to pass on the extra cost to our customers. We will of course be compliant with this regulation from the beginning of 1st of January, and that means that we will be switching to cleaner fuels during December. We have built up stock, supply contracts, so I feel very ready for this.
You say you want to pass on those higher costs to your customers. Given the weakness, though, in the demand backdrop, do you think they'll be able to absorb that?
Yeah, I believe we will be able to pass on the cost to our customers. I think everybody recognizes that moving to cleaner fuel so that we all pollute a lot less is a positive agenda that is getting support.
Some people talk about how the fuel market could be further disrupted by this, not just the fuels you're buying, but other parts of the fuel economy, if you like, could be disrupted by these changes, such as the size of the change. Are you expecting to see disruption in fuel markets?
Well, I'm not really an expert on fuel markets, but what I can say is, of course, that this is a massive change. I mean, from Maersk alone, we are buying more than 10 million tons of fuel every year. So moving from high sulfur to low sulfur fuel, the volumes we are talking about will have a massive impact on the fuel market, and I think it's quite conceivable that other sectors that also use heavy fuel will be impacted.
Let me talk to you about capital expenditure and investment. Given the weakness in the underlying growth or demand picture then, Soren, what do you expect in terms of investments in new ships?
We continue to be very capital disciplined. In 2017, we invested $4 billion. In 2018, $3.2 billion. This year we are guiding 2.2, and we have just released new guidance for the next 2 years of between 3 to 4 billion, so between 1.5 to 2 per year, and that's well below our depreciation levels of 3 billion. So that's a clear sign that we don't believe that we need a lot of new capacity, a lot of new ships, and we're not intending to grow our fleet anytime soon.
We've talked a lot about the threat from trade tensions, Soren. Do you think we are at peak globalization? I realise that's a sort of geopolitical question, but do you plan the business, do you prepare the business for that kind of future?
No, I absolutely. First of all, I'm a very, very strong believer in the benefits of free and fair trade on jobs, on growth, on prosperity, consumption, opportunity, and so on. Secondly, we have huge continents where we still, like Africa, like Latin America, India as a country, where we still have plenty of opportunity for growth in the economy, and therefore bringing more people into the middle class and having them be able to consume more. So we believe that trade will continue to grow, and we are nowhere near peak globalization.